So to pick on one of the reasons why this 10-year rate's blowing up, the hedge funds in America, which is a massive industry, trillions and trillions of dollars, and they work on about a 20 to 1 ratio. So for $1 trillion of exposure, they'd only have $50 million of $500 million of capital, so only 5% of capital. So what do they do? It's if you Google basis hedge trade, what that is that a lot of parts of the hedge fund market is buying US treasuries. They buy the treasuries and then they short the futures market. That's called a basis trade. So if you've got a physical 10-year bond and you've got a 10-year future, and they're different interest rates, say they're 20 points apart, they'll buy the treasury, sell the futures in the hope that trade comes in together. And the same thing happened in long-term capital management back in 1997. They bought the Russian bonds at a higher interest rate, and as a hedge they shorted the US bonds in the hope that those interest rates come together. But of course the Russian bonds interest rates went out a lot, sold out a lot further, and it destroyed the company called Long-Term Capital Management. You can Google that. So, and the government had to come in and bail them out. Now the hedge fund industry is doing the basis trades with a rear pin back, buying treasuries, shorting futures, but it is currently unwinding. You can pick it up in Bloomberg, a couple other websites, and the trade is unwinding. And if you unwind, what it means is they're selling the cash treasuries and buying back the futures. They're just unwinding that position. Now, to get a sense of the value of that market, the basis trade, is that they believe if the market's moved what they call 60 basis points. So when it goes from 4.4 to 5%, that is 0.6, that is 60 basis points. They believe 1 basis point is worth $600 million.
Yeah, geez.
So 600 million times 60 is about 3.6 trillion. And what happened when the basis trade was in trouble in 2019, 2020, the government had to come in and do a bailout. So what we're finding is that here is one aspect, unknown unknowns, as I could say, of what happens when we disrupt the financial markets with these tariffs. Trade flows, where are we going? We're all confused. There's no certainty out there. You seem to be at the whim of whether you're a friend with whether you get an invitation to Mar-a-Lago or not.